There's Lloyd's, Royal Bank of Scotland, HSBC, and the other one I can't remember, Barclays.
RBS.
Yeah, they're the four financial abattoirs or slaughterhouses, and they are basically slaughtering the economy, paying themselves huge fees to slaughter the economy, to fill the financial products, the securitization, the derivatives, with substitution of junk bonds, which are collateralized by nothing, which are kept afloat by the Bank of England, now from Mark Carney, who is, should be in a circus sideshow, as any Carney should be. That was an appropriate name for Mark Carney. He's a Carney Barkman.
Well, he's also a carnivore, right, for the horse meat that is in maybe some of these collateralized debt obligations. They should have done a swap between the mortgage-backed securities and these lasagna. Now, finally on this, of course, again, comparing it to the financial crisis, because who is the biggest derivatives wielder in the world? That's JP Morgan. So it makes sense that, of course, they're going to be somewhere on this chain of food fraud. Horse meat scandal, the polo player linked to Findus. There's some photos of here. Lyndon Lee, the boss of the private equity firm linked to Findus, is a financier straight out of Central Casting. Yes, because he's ex-Goldman Sachs. He's riding around on a horse. They don't say whether he sold his horse to one of these lasagnas. I would expect maybe it would be like a AAA lasagna ready meal. But they end with, following a restructuring last September, Lion Capital's stake, this is his private equity firm, in Findus was watered down, no pun intended, I guess, to less than a third, with hedge funds, Highbridge Capital, JP Morgan, and Northwest Mutual buying into the company.
Yeah, well, I think they're going to remake Sweeney Todd with Jamie Dimon as Sweeney Todd, where he's slicing and dicing his customers and feeding them into the lasagna burgers.
At least their wealth, of course.
He's a honky for sure. All right, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Rex.
Stay tuned for the second half. We'll be speaking to David Graeber, author of Debt, The First 5,000 Years. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to anthropologist David Graeber, author of Debt, The First 5,000 Years. David Graeber, welcome back to the Keiser Report.
Thanks so much for having me.
All right, David Graeber, all the talk is of global currency war, from money printing to devaluations to gold repatriation. But was it the collapse of the debt markets that happened first? Is the debt-based fiat system falling apart?
Yeah, I would say it is. I think that we're at a point where people are coasting along because it's the only thing they know how to do, and basically a lot of them don't care if the whole thing falls apart. That's why 2008 happened to begin with. But I get the impression that there's maybe 5–10% of the people running things who actually care about the long-term viability of the system, and when I talk to these guys, they're freaking out. I mean, they realize they're about to hit 3 different walls at the same time.
Explain more. What 3 different walls?
Well, I mean, there's the debt overhang, there's the ecological collapse. There's a whole series of obviously not viable long-term patterns going on.
But that's been the case for a number of years. And why?
Yeah.
What's the trigger now? Is it... first of all, going back to the book, Debt, The First 5,000 Years, which is a great book, which came first, money or debt?
Well, it depends on how you define it. But I mean, a debt in the sense of like, I owe you one. An obligation, that's always existed.
Right, so credit, in other words, in the book they talk about credit kind of came first. In other words, people would say, I owe you, let's do this, and I owe you something
or
in the
they
future.
say, here, I'll give you a gift, but really, you owe them something.
And they kind of invented money to extinguish the debts.
As a way of, because normally you don't want to extinguish the debts, because if somebody gives you something, you give them something back exactly the same. It's like saying, like, I don't want to know you anymore.
Now, over the course of the many millennia, the concept of debt jubilee has been big. Occasionally the debts get so big. And going back to medieval times, the debts were seen, debt forgiveness were seen as a way to prevent the population from getting in bed with their competing rulers.
That's
competing
right.
rulers, aristocracy. It wasn't that of
essentially being enslaved and everybody ending up some flunky, So kings wouldn't really like that, because then the barons would take over.
So what about a modern day debt jubilee? Where are we in that? Because it looks as though if they're hitting all these walls simultaneously, someone's going to pop up and say, you know what, maybe we need to just do a debt forgiveness.
Absolutely, and it's really remarkable the degree to which they're starting to talk about it. Like 2 years ago, it would have been completely completely insane to suggest debt forgiveness. Now, as I say, those people actually care about the long-term viability of the system. They're starting to talk about it. And I think it's inevitable. Some kind of mass debt forgiveness has to happen. The real struggle right now, I think, is how they're going to dress it up, whether they're going to be honest about what they're doing or figure out some way to finagle it so they can claim it's not true, because they want to keep that idea that at least poor people really do have to pay their debts. And, I mean, rich people don't, obviously. But, and you know, whether it's going to be used as a way of reproducing the same system, the same ridiculous and unequal power structures, or whether ordinary people are going to finally have some say in what the economy looks like, and we're going to transform to something more sane. I mean, that's what it is. What form is the debt forgiveness going to take?
Well, let's look at an institution like the Federal Reserve Bank in Washington, D.C. They, during this crisis, have expanded their balance sheet from $800 billion to over $3 trillion, but they're leveraged 50 to 1. So less than 2% of this $3 trillion or so is something that has any market value. The rest is just an accounting figure that suggests a market value under certain conditions. Is there ever been in history a time when the global banking system has been leveraged to such a degree where there is so little there's so little collateral backing up these institutions?
Generally speaking, in the past, you'd have temples full of gold, some kind of material thing, and then all sorts of people doing credit on the basis of that. I mean, it is true that, like, the Fed does have most of the world's gold reserves there, but it's really just a symbol. No, it's made up. I mean, I think most of that Fed money is just, it's an accounting figure for a way of just giving money to the banks, which is what the government policy has been since 2008. You know, you lend them, you print money, you lend it to them at incredibly low rate of interest, and then you let them put it back in the Fed and lend it back to you again at a slightly higher rate of interest. So, you know, the numbers are meaningless. It's just a way of just flat out giving money to rich people.
Well, you mentioned about central banks and gold. There's about 160,000 tons of gold above ground. Approximately a third is owned by central banks. The rest is owned by out there in the population. For example, the population of India owns 20,000 tons of gold.
Amazing.
And it's owned in jewelry, and it's owned in other store houses, and the public now is increasingly buying gold. But there seems to be a scramble now. Central banks, particularly Russia, who has been the biggest buyer of gold, really. China's buying gold aggressively. Repatriation of gold by Germany. How do you interpret that?
I don't know. I think people are sort of trying to hedge their bets in as many ways as possible because they know the system's going to collapse, so it only seems natural to grab on something you think might be of enduring value.
Well, Russia's come out and said publicly that they believe that the dollar reserve system and the fiat money system is bogus and about to collapse. That's why they're buying gold. Do you agree?
Well, I mean, the system is basically an imperial system. I've gotten a lot of flack for saying this, but I agree with Michael Hudson's analysis that, you know, after Bretton Woods, they set up this U.S. Treasury bond system, which essentially functions as a way of funneling tribute money into the U.S., basically to support the American military. And largely it's been the countries that are under U.S. military protection or have military bases all over them that are buying this stuff. So Russia is one of the countries that's calling it like it is, and they've said, like, there is no real difference between American military power and American financial power. If we want to resist one, we have to resist the other.
Now, you mentioned foreign policy, and it seems to be a relationship between this money printing and the rise of the petrodollar. And, of course, that has really been the basis for so many wars recently in the last 10 or 15 years, the Iraq War, Afghanistan, and what's happening in Africa. It's a mad scramble for resources. And that oil industry, since 1970, since when the U.S. closed the gold window, there has been a concurrent growth in both credit and oil exploration. These two things have gone. Big capital and big oil have grown up together. We head into a period now where the credit seems to be falling apart as due to the banking collapse. And so the money to go out there and get oil and to explore oil and to finance the war machine that goes out there to get oil is concurrently falling apart as well. If the credit doesn't start to flow again, then the police state and the war state is going to run out of money.
That's what we're hoping is going to happen. Yeah, I mean, anybody who likes peace in the world wants to shut the system down.
Right, so the credit bubble collapsing from those who are anti-war